In this video, I'm going to explain what an initial balance is and what this report on edgeful.com is saying. So, I'm going to start off by explaining what is an initial balance. The initial balance is the high and the low of the first hour of market open. So you can see that right here. We have this explainer. What is an initial balance? We also have a visual representation just to show you that this is the initial balance, this is the low, this is the high of that first hour. So you can see that looking at SPY in the trailing 1 year, this report will show you that 62% of the time, one side of the initial balance will break after it is formed. So in this case, you can see these are our TradingView indicators, which you can actually request by just clicking this button right here. So this automatically plots for every day the high and the low of the initial balance. So it just plots out the initial balance. So here you can see that price will generally break one side after it's formed. So that happens 62% of the time. Price will only break both sides 37% of the time. So generally after one side gets broken, you don't really want to target that other side for a double touch. And then finally, you can see that there are no breaks only 1% of the time. So an example of that would be if price just stayed in here all day, which is very unlikely, extremely unlikely. So you want to target one side. You don't really want to target both, and you have a very, very high chance that you're going to touch at least one. So that is the initial balance breakout report. The way that you can use this is to say, okay, I understand, here are my levels. So wait that first hour, now you know your levels, and then targeting one of those levels. If you see something setting up, but just know that for SPY, there's a less chance of that happening. Then we're going to look at the by extension report here, and this just shows you after price breaks outside of this range, how much can you expect it to move? So in this case, this was actually a larger move down, definitely above this average, but we're just going to see right now. So the way that we measure this is from the initial balance low or the high to the peak before. So in an example where price broke out right here, came down like that, and then came back here and broke back into the level, we're going to look at the performance from here to here, from here to the peak, if that makes sense. So generally, for the moves that break out to the top side, so for moves that break out, so average extension performance upwards, that's going to be from this initial balance high, you can expect 1/3% roughly. So you can set your profit targets within this area. So I just plotted 1/3%. So here you can say, okay, I'm going to set my profit targets in this area because after this I can expect it to reverse. Same thing goes for the moves down. So in this case, obviously this was a much bigger move down, but on average, you're going to see a move like this before it comes back. So obviously there was a larger sell-off here. So this example is just more of an anomaly day. And then you can also see the switch to the dollar. So that if you don't like to use percentages, you can see the average in dollars as well. So you can always look at the explainer graphs that we have here. You can look at the breakdowns that we have here, and then obviously this video. But then if you ever have any questions, you can just reach out to our support right here and we will answer you almost immediately. So please don't be shy to do that. And don't forget to request access to our TradingView indicators so you can actually get this right on your chart without having to worry about mistakenly plotting the wrong levels. So thank you for watching. I hope this helps.